Okay. Yeah.
Oh,
And I'm going to mute so you don't hear me in the background.
okay. Yeah. All right. So, I think everybody here knows where to find me, but I've got the Substack that I put out every couple of weeks, or try to do it weekly, and then I'll put most of my stuff out on X pretty quickly. If it's something important, I'll drop it into some of the other spaces that I'm in. Um, looking at the anxiety in the market. Do you guys know who Wells Wilder is?
So no, I've never read any of his work. I'm currently reading Darvis,
Oh, nice.
and he talks about this as well, as most folks do, right? So
Yeah, what Wilder is, there's a moving average. Wilder's moving average is the one that is used in the ADX and in the RSI. And Wilder invented the ADX and directional index and RSI. So and those are a couple of like the most heavily used tools. So it was good to see a timely quote from him. Considering we'll see the majority of the market looking at least the RSI as we navigate this. But so the key for me, anyways, is just making sure that I stick to we spend a lot of time
yeah.
coming up with a plan, and I want to stick to it when we see a downturn. And the reason that when people say that you can't time the market, the reason that a lot of the time they're right is because the failures come when folks and institutions included don't stick to their plan and they deviate. So we want the ability to have some judgment, but if your system and your plan calls for you to exit under certain conditions, um, that's what I do. And if those were the wrong decisions, I want to revisit it in post-trade analysis, not live at the moment. Taking a look at the few updates, I don't plan to normally update the market timing tool signals this often, but a lot of them don't flip from green to yellow or red that often, and now we've got 50% of them in the red. I'm thinking about moving off of the McClellan oscillator. It's more of like a short-term trading mean reversion, but and moving to more of a slower, longer term breadth measure than even that and this ADL divided by the moving average. Both of them are good signals that the market's going to trend in one direction or the other in the short term. But if we want to use this for market timing, I'll probably swap that with a longer term signal. Volatility weighted put call we'll take a look at, but the this is one that is good for like a leading signal that would tell us to expect like maybe like a 3 to 6% downward movement in the market if it triggers first. And then if the market's already moving lower, it's one that can kind of catch up to the market. So we'll see, a trend in put calls, break above its moving average and then through its Bollinger Band. And that'll be more confirmational. But at this point, whether that one's red or yellow is indifferent for us. The fact that it's below and we'll look at it, but the fact that it's below a trend line is enough to confirm what we're seeing in the others. The Fabian model flipped to red when it closed below 57.50, and that's a slower moving indicator. So that's pretty strong confirmation that this is one of the nastier downturns that we'll see. I think we'll see, into the first bounce, a lot of folks will be tempted to think that it's over, but these are really strong momentum indicators, and they don't signal a downturn very often. And that's why I need this, weight of evidence to flip me from bullish to bearish. The Fisher Coppock is still green. That's the slowest to transition. If we look at it on a weekly basis, it's yellow. I prefer the 2 week. And then equity model is going to be slower. That could flip by the end of this week. And the extreme vulnerability, if we don't see a really big bounce upward, that'll probably set a new record by like next Tuesday. And then the index momentum, this is the system that I started with in technical analysis that uses RSI ADX on multiple time frames with Fibonacci crossovers. This will flip from yellow to red this week with the RSI closing below the bull zone. So definitely not a good look. We haven't seen this in a long time, but that's what we're prepared for. A couple of highlights that came up on X over the past couple of days that I think we should consider. Linda has got some unique uses for settings in the MACD that kind of make it operate a bit more like a short-term RSI. She's worth following, and she's more of a short-term trader, so definitely worth checking out. But her comment here about the closes below the 5 SMA on the dailies, less than 5% of the time has that been the bottom, right? It's so we can see a movement upwards, but this is not essentially saying her observation is this is not likely to be a low from this experience. Ryan, I've followed him for a long time. I'm a fan of their work. They tend to be very bullish. There's not the market's primarily in an uptrend 80-90% of the time. So if you're going to pick a side, bullish is the side to go with. I thought this was interesting because there are people that'll take this seriously and will think that the market should have bottomed on the 12th because it has the last 20 years, and that if it doesn't, this could affect sentiment. So we'll just have to see what the reaction is over the next couple of days to missing this if the market reads into it. But this did get I noticed this was reposted several times, so it certainly got a lot of visibility. And then Ian posted today that when we see the initial relief bounces, that is likely to have a lot of the same look. This is what we're going to be looking for when we see our first movement upwards, right? Is we'll probably come back up to a trend line and meet some initial resistance there, and that's where you get these like ABC types of movements downward. So just a lot of people seeing the same thing, and these are probably some of the more subtly followed folks for the broader market, but they're really well known in technical analysis. I shared this in a note on the Substack today, but this is essentially what we're looking to see. I post this sentiment cycle quite a bit, and this is a pattern that we will just see over and over in the market, in uptrends and in downtrends, and these emotions are very consistent. So, I'd say we're kind of like at the tail end of like a panicky movement, right? This is like exactly what we've seen this past week, and it normally doesn't. We don't see a major index take this dive lower without a bounce that often. This is a pretty steep decline, and so this first bounce is going to probably look a lot like this, right? And before it makes a leg lower, and what we'll look for in confirmation that we've seen a local low. I mean, there's other indicators that will pull in, but the price action, we'll want to see it come up, exhaust some of these short sellers and dip buyers and things. Like it'll shake out a number of people before making its recovery. So we're going to look for that resistance into the initial buying, a pullback into like a higher low, and then continuation. And this is just very classic behavior. We'll see it on the lower time frame, on the intraday chart, and then we'll start to see it on the daily as well. So that's what we're going to try to isolate and identify, and then let's jump into a few of our charts. Is this still showing the PowerPoint, or is this showing the
just a Mamus cycle?
Okay, let me flip it over to the charts. All right, there we go. All right, do you guys see the trend?
Yeah.
Matrix?
Yep.
All right, good. So we're seeing a little bit of drop off on treasuries, which I'm expecting that we'll see. Giving it a little bit more thought on the sequence for assets topping. What would be concerning here is if treasuries make a make a new high, and then roll over, and then we see, a big rally up in equities, because the overarching sequence and flow of assets will start with bonds and treasuries peaking and then rolling over, then equities will, and then we'll see the commodity run. And that could play out over, several months to a year. So I don't think this is like, the start of necessarily a recession, but it could be, pretty nasty drawdown for the market. But at the recovery from that, if we don't see treasuries, trend upwards with equities, that'll tell us that this could be the recovery could be the end of a bull run for the U.S. equity market. Gold remains very strong. I remain in the position, doing a little bit of profit taking, but I'm still heavily into gold. And then we still have a little bit of, we have near-term weakness in the commodity ETFs, and the US dollar is starting to pick back up on the lower time frame, but on the higher time frames, the commodities and Dixie are pretty weak. And people are still thinking this should be a tailwind to equities. We'll see, we'll see M2 money supply kind of go up and down with demand for the US dollar. But I'm not reading into a movement in M2 as it's something that we should be using as like confirmation that the market is moving upwards. I'm only going to follow price and momentum indicators. So I mentioned the Fabian model. So, this is a weekly chart. So if we have an awesome day tomorrow, it'll recover, but that's unlikely. So this is on a weekly basis, 77% win rate to enter and exit with the signals from the Fabian market timing model, and this one will officially give us an exit as of close tomorrow. And you can see 22 trades in the S&P going back to 1970. That's not a lot of movement. So the last time it signaled an entry was January in 2024. It did have a little shakeout between October 23 and January 24, but very slow indicator. So if this is telling us that it's time to exit, I'm going to guess that that's not the low and that we should pay attention. The volatility weighted put call, again, this one's really high win-loss rate. And also a low number of trades, though it's counting these in kind of an irregular fashion. So I do it manually, but this is likely to cross over. But the damage is already done. Once we're below this follow line, it's not going to signal every time that we have a drawdown. Just when the ratio of puts and calls and the volume there is trending very quickly and severely. The VIX is going to give us a good signal for rolling over, but we've talked about this in prior calls. In this system, what we're looking for is the upper band of the Keltner channel to confirm a top. And so once this rolls over and trends lower, and ideally when the VIX returns to the regression channel, that should mark the local low in the S&P. If we go back and take a look, I'm going to see like, a prior more severe downturn. Like towards the tail end in 2021, we see you can get a little shakeout here, right? So it's returning to its regression channel. The Keltner's rolling over. That's confirming our local low. But as the market trends lower, we're continuing to see like a series of lower highs in volatility, and that's what we have to watch out for now, because we're experiencing that, and that's what causes us to see a final spike, and that's when we want to transition to a new regression band to start the new volatility regime. And when that happens, that'll be the S&P rolling below a major moving average with it. Um, so, we could see this roll over and still be shaken out, even though it does predict a local or identify local lows for us. And you can see we're below this major moving average. This is the yeah 233 day volume weighted average. This is an indicator that I'm going to consider moving into the market timing tool set to replace probably the shorter term McClellan oscillator. This is the cumulative new highs, new lows for the NYSE. And it accumulates for all time, which I initially wasn't a big fan of, but we can see how slow moving this is. This came up in one of the CMT presentations this past couple of weeks, but we see this um, cumulative new highs minus new lows cross below its 50-day simple moving average, and that's a sign that we're definitely trending lower, right? So once we lose the cumulative new highs, new lows, we've shifted from a bull market, from an uptrend to a downtrend essentially. And you can see there's a little shakeout here in 2021 and 2022 where there's a little whipsaw, right? But when we're pairing that with this is a selling climax indicator that I've used on a couple of other charts, but when this exceeds 10%, so 4% is a sign that we should close our day trades in anything short term and wait for selling pressure to calm down. But when this hits 10%, that's a level of momentum that's going to see some follow through. And that's true, going back to like the early stage of the data set, right? Here's maybe like the only shakeout that I see in 2019. But you're just dipping below on a 10% day and it's isolated. The norm is that you get to a 10% net new lows and you've now got some momentum behind your selling and a more severe downturn on its way. And so the two together are a pretty decent signal. And that is confirmed as of last Wednesday was the first 10% day, and Tuesday last week was the first 10% day, and Wednesday was the crossover. So this one's concerning for sure. And then looking at, let me expand this one a little bit. So what we've got here is the number of companies that are underneath their in the S&P 500 that are underneath the 200-day simple moving average. And this indicator will do the 50-day and the 20-day as well. But the 200 is where we can see a lot of the damage starting to happen. So you've got, essentially like every instance of the number of companies in the S&P 500 going below their 200-day, when that gets to about 55% of the market is now below its 200-day moving average, that starts a larger downturn. These don't mark the bottom, right? It's rare for us to go through and see, 2023 we were already in kind of a downtrend, and this is like the tail end of it, or it's making like a failed recovery before it climbs out. That's this first instance is the most concerning for us and tends to lead to a lot of follow through. And so we crossed that 55% mark. We actually crossed it on Monday of last week. So this starts us towards a movement to a new local low. We could see a little pop in here somewhere, but this is most likely going to see some additional follow through to the downside. If we look at the distance between are 200, 20, and 50. So you can kind of see they start to spread out during a recovery, right? So the 200, of course, is everybody recovers that most quickly. So the number of companies under the 200 drops dramatically, and then the number of companies under their 20 and 50 start to fall, and then they gradually, they bottom, and then we gradually start to lose companies. Uh, the number of companies that are above their 20 and 50-day moving average, and then eventually lose the 200. So you've got this like bottoming sequence and topping sequence that we can see with a dispersion. But it's only really worth paying attention to at extremes. And so the point here is that, we had kind of an extreme, the last of an extreme on the mid-February timeframe, and now we're kind of in the middle of a trend. So this is making its transition, is what it looks like. To turn off it's just a little bit noisy. Now, the capitulation oscillators these are a couple of my favorites. The long-term capitulation oscillator is like nowhere near a bottom. So there's nothing here that's predicting that we've seen a low. And the short-term capitulation oscillator is crossing below an extreme after testing it for a few days. So you don't see a lot of instances of the short term being tested in a cluster like that. We'd have to go back to like the 2020 like June timeframe to see that. So this tells us that this is more of a bottoming signal for us, and it's telling us that we're not there yet. What is interesting do I have it on this one or the next one? What is interesting on this chart is we've got an indicator that tells us when we've made an extreme in the number of absolute new highs, whether it's an extreme, whether it's an extremely large number of net new highs or an extremely low number. It's giving us the absolute number, and it's a deviation from its 3-day moving average. So it's letting us know when we've seen an extreme shift in risk preference in the market. The bright colors are where it's made extreme highs, and in instances where those are clustered together, it's these tend to group up in the middle of bull markets, and you'll get some stragglers towards the tail end. And even in the middle of downtrends, you'll see some stragglers. But what is interesting on this indicator is the number, the threshold of 15. So when we have the difference between the absolute volume of companies making a new high and its 3-day moving average, when the difference between those two numbers is less than 15, we're at an extreme level. And these don't indicate a bottom. So again, we're going through a bunch of signals that tell us that we're in the middle of something, but that it's not likely to be the bottom. And in each of these cases, the market takes a pretty decent bounce after the first day that we're below 15. Companies, a net difference of 15 companies making an extreme new low from the 3-day moving average of it. So each of these instances see a little bounce afterwards, and then for the most part, continuation lower. The damage is just still underway, not completed yet. I think this one's coming late in the sequence in 2022. This one actually does mark a low, but you can see it's retested. And so just eyeballing these going back through 2020, each of these times that we went below 15, a bounce, and then lower, bounce, lower. Here we stayed the same. We had a failed recovery. bounce higher and then eventually lower. So we just saw that for the first time today, and that's the first time in um, almost a year. This one's interesting because uh, Arun posted this on Twitter. If you guys follow him, he posts a lot of really great memes, but occasionally he posts his real TA, and the guy's just super sharp. Uh, he's looking at the assets under management um, for the long ETFs and the short ETFs. And so what I did here was just threw together a quick indicator that combines. Oh, actually, I just added them because it's an indicator on TradingView to get assets under management for the ETFs. So I used this summation of three indicators to total the assets under management for the triple leveraged QQQ, the leveraged SOX semiconductor ETF, and triple leveraged S&P. So these are the largest ETFs by asset size that are leveraged long. And then I'm comparing those to the assets that are largest for leverage short for the S&P semiconductor sector and for the triple Qs. And throwing a Bollinger Band onto them helps us to see where we're taking an extreme movement. But it's I think my drawings came off in this one. Or do I have them on the S&P? Yeah, so if we look at the S&P relative to these assets under management, taking a look back to 2018, and so we've got the signals for when we go into this 5% drawdown alert. Each time we're seeing assets draw down from the leveraged long ETFs, and then a almost equally large increase to the asset size in the leveraged short. And that's the case in every single one of these instances that we're seeing an increase. So the assets under management in the leveraged shorts go up 23% from the start of this low. So this is like basically it looks like retail traders coming into short late, and the leveraged longs are being exited at the start of the drawdown. Again, in 2020, this massive drawdown, you can see the assets under management for the leveraged shorts are going up with the market. Everybody thinks that this is another leg down, and it doesn't. And so this, confirms for us that we've seen the low when the assets under management for the shorts start to rise like this into a decline. Again, the 2022 drawdown, and you can see that assets under management for the shorts, you're getting like a short squeeze right here in the fall of 2022, and then that shakes them out. They come back in to catch the bottom one more time, and then we start the bear market or start the bull market. Right now, as of today, we're down about 33%, 34% from the recent high in assets under management for leverage long, about 32, I guess. And the assets under management for leverage shorts, well, they aren't up that much. I guess we're at 19% from a low. So it's starting to get there, but it's still not, it doesn't take out the prior high from the middle of February. So I take this to mean that the market's still not convinced that this is a bearish movement, and we won't know that the market's convinced or that they've caught on too late until we see assets pile into these leverage shorts and then get burned for it. So this tells me that again, all of these indicators are pointing to us being in the middle of a movement, not at the low of a movement. Taking a look at the same thing for Bitcoin, this one's a little bit unique because we haven't had many ETFs or much ETF history for Bitcoin. But taking a look at assets under management for the three largest ETFs, And then look at how much larger the BlackRock or the Fidelity ETF is than the other ones. Um, then taking a look at the short ETFs. So we've got two short ETFs for Bitcoin itself, BITI and SBIT, and then a short ETF for MicroStrategy that's got it's actually got more it's got more assets under management than the two short Bitcoin ETFs. So it looks like when you get the shorts breaking out of the breaking above the top of the Bollinger Band, you have a bit of a capitulation event, and the market makes a high and then a low, right? So it tends to be um, you have people shorting, piling into shorts for Bitcoin as Bitcoin's price is rising, and so they're getting burned for it. And then when it breaks below, so now they've capitulated, they've closed their shorts, and price is in a decline. So we had that bounce in late February. Everybody tried to short into it, get a little short squeeze. Bitcoin rises now. Now these short assets under management for Bitcoin ETFs are below their moving average, and the market's declining with it. So we need some of that short volume to run against, and we're not seeing it. And the assets under management for the Bitcoin ETFs are exiting as well on a descending slope. So once these slopes are descending on the moving average, it's got a lot of momentum behind it. So it's telling me that Bitcoin's probably trending lower for the near term. I'm going to continue testing this system, but we've got two methods here on the same chart. One is the VIX contango versus backwardation that I shared a few days ago, and when we see so I prefer this one on a lower time frame. So on using a 3-week chart of VIX contango, you could see we've got very high win loss rate with and this is using the triple leveraged S&P. So this is telling us, giving us signals to move in and out of the triple leveraged S&P when we have a large backwardation event, and then enter when we get below our moving average. So this one has a great win-loss rate on the 3-week, and I'm going to keep that one on the radar. And then on the daily, this is one that Tom McClellan posted on his Twitter a few weeks ago, where we see a divergence between the inverse of the largest VIX value among the different durations of VIX contracts and I'm using, let's see which ones I'm using here. And this one I'm using the 9-day, the 3-month, the 6-month, and the 1 year. And so it's going to take the largest of those values and do this aggregated line for us. And when that diverges from the price trend in the S&P, we're going to see a transition. And this has an 85% win rate on the daily. That's pretty strong win rate. So we'll have alerts for this going forward, but when we see and we won't get a signal for every movement, but when we see an extreme divergence between the trend in the inverted VIX and the price trend for the S&P, that'll be a good signal for entries and exits. And again, this is not a lot of signals, like 20 signals, but the historical data doesn't go very far back for these ETF contracts in TradingView, or the VIX contracts. We talked about the Fisher-Coppock indicator when we went through the market timing tools, but here it is on the 2-week, right? And so we don't have a sell signal yet on the 2-week for the Fisher and the Coppock, though this has been like flirting with a crossover for a little while, and the Coppock is definitely headed lower. These have strong win rates, and so I prefer them as a slower moving indicator. So slow movement, you know, keeps us with the trend for as long as possible. But if we look at this on a weekly basis, this has three times as many entries and exits and a lower win rate. The Fisher has crossed over and the Copic is very close. So these are telling us that um, if we see opportunities to take profit and protect assets, probably going to be advantageous. This is likely to flip to red very soon. And then when we look for bottoming signals, the Williams R percent is very, very similar to a stochastic formula. Caleb uses these on Twitter. If you guys follow him, Caleb Franzen. He's very big on these. I like these as a real slow moving confirmation for us. So I've got them ranging from 8 months to 18 months to 24 months. And the signal is, when this 8 month plummets down to the bottom and either the 18 month comes to the bottom as well, or the 24 month makes it to the middle, that's confirmation that we're in a downtrend and we're not in an uptrend again, and these are slow confirmation, right? But we're not back into an uptrend until the 8 month makes it back above its extreme high, and then they camp out there, right? So like once we're in an uptrend, these things are slow moving. They just stay up at the top. So we're going to be looking for this to bottom, and um, and then the 18 and the 12 to cross the middle, and then once the 8 month goes to the top, and then either the 18 month or the 24 cross their middle, the middle of their indicator, then we'll know that we've climbed out of a downtrend. And this has again, I'm looking for market timing things that are very consistent and slow moving. So going back to like 1980, we don't have a ton of signals on this, and so this is you can see it does come close a lot of times, but like in the middle of 2018, we would have kept the majority of our funds in the market and would have continued higher. And so that's what I'm looking for from a timing signal. I'm not looking to whipsaw my funds in and out of the market on a frequent basis. Then just because it's interesting to me, this is the Zwig breadth thrust at the bottom, and the fear and greed, like a proxy for the fear and greed calculation in the middle. And when these make a low together, we've typically, seen a local low in the market. And as far down as we are in the S&P, this is not the lowest that this fear and greed indicator. It's not the lowest reading on this fear indicator over the last couple of years. So this tells me that the market's probably still a bit shell-shocked to what's happening and hasn't started to make real transitions in the way that funds are allocated yet. And then seasonality wise, the March has a 50-50 track record for ending positively the first year of a presidential cycle, and but a really low performance rate at like 0.3%. So this is definitely not a good March for us. But a weak February and a weak March are kind of the norm for this seasonal cycle. Though I would be hesitant to blame what's happening here purely on seasonality, because we know there's a lot of other influence taking place in the market. But a low and a recovery in March would still be, though extreme, like consistent with the annual trend for the first year of a presidential cycle. So indicator wise, timing cycle wise, like that's what I have for tonight that I wanted to share. Not seeing a confirmation of a low anywhere yet, but certainly some indications that we're in the middle of an issue. I was going to share some some one-off charts as well. But do you guys have questions or anything that you're seeing that we should take a look at?
No, I don't. I'd like to go through your presentation again once it's posted for the video. And then, so you may get some questions from me through the B&B.
Yeah,
So,
absolutely. And I'm happy to answer any questions that you guys come up with afterwards. I tend to have a habit of like probably glossing over some things that people don't look at very often. And if
I
anything,
don't think, yeah, I don't think you glossed over anything. It's just that it's so in depth. I would like to go over it again before I'm able to present intelligent questions.
yeah, fair enough.
Okay.
This one on the screen is interesting to me. So JD added this one in the premium portfolio, the Hibbs triple leveraged bear ETF for high beta stocks. So I haven't used this one much, but it made me think, if we see something extreme in this ETF, this makes me think it's probably an ETF that retail traders would pile into lately or pile into late. Um, so just anchoring the VWAP to prior highs where it's failed to retake its prior high. We're doing that again right now. It's made it up above this AVWAP from the low of last October. This suggests to me that we're probably in proximity to a bounce in the market. It would be, just on par for like the market to shake people out of an ETF like this. And you can see that the positive directional index is rolling below the ADX, and that usually signals that the trend is cooling and about to roll over. And then we've got the bottom indicator is on balance volume, and it's a good indicator for reversals because it combines volume and price. And so when you see a divergence in it, those tend to be really consistent, and then you see a market reversal. So we've got a bearish divergence as it's running into the AVWAP from a prior failed high. And that's a recipe for something to roll over. So if the bear ETF for the high beta stocks makes a local high and rolls over, then coincidentally the high beta stocks will take a bullish bounce upward. And it's probably not marking the bottom, but just a shakeout and a continued downtrend. Um, yeah, Tanner, I just see Tanner's note on the interest rates. Let's take a look at some of the rates. Um, so I've got I don't know if you guys have used this before, but the new the new screener on TradingView, the Pine screener where you can choose your indicator. Has anybody else tried this one yet?
No, I'm not in TradingView, but
What?
I know. I just use Infidelity, but I see all your charts. I'm like, I should maybe just get an account.
Yeah, if you do like a trial, and then wait for the trial to end, they'll start offering deals that are almost as good as the Black Friday sale. And then when the Black Friday sale comes, you can always uh you can renew early and it'll prorate the end of your contract, so you can always take advantage of the sales. But yeah, if we take a look at a few of these bullish conditions. So let's do let's do like a couple of moving average conditions. So you can scan an entire list against them, Um, so looking at the 5-day moving upward, you've got some interesting things that pop up, but the interest rates were popping up there the other day. And so you see some weird stuff like central bank assets are in a sustained uptrend all of a sudden. You've got some of these you've got USDT dominance, the 3-month VIX. These are not things that that you want to see trending higher in a bull market. The short ETF for ETH. Um, Pharmas typically do well in downtrends. This high beta bear ETF, and then precious metals company. So these are all things that you would expect to see doing well during a downturn, and they're all doing well during a downturn. And then if we look at see if there's anything that broke out of a momentum squeeze. Nothing breaking out of a momentum squeeze yet. Bartcoin's in a squeeze, right? You got some weird things that are in momentum squeezes. So it's showing a bunch of the U.S. rates in momentum squeeze and the U.S. manufacturing index. That's interesting. So, anyways, let's take a look at some of the actual rates. But um, the so here's the yield curve for the 10-year versus the 3-month, and that's just just slightly inverted again. It's close to disinverting back to above one. The 10-year versus the 2-year has been disinverted, and it looks like it's making a leg higher. I had other drawings on this one. And then the 10-year, 3-year also disinverted. So, these all climbing back above one, it tells us that now we're starting to see strong favor towards the US 10-year. These are log. And here it is with a GAN that I drew, I think the middle of last year. And so this called just about called the timing for when we disinverted, and continuing to climb up and find support at each of these angles, which is interesting to see a drawing like this have trend respected, well over a year after it's been anchored. But we're rising to a new level, descending, and then coming back above. So this is getting up to a level that we haven't seen since the middle of 2022 during the drawdown. The 10-year itself by price, completed its kind of a zigzag pattern. And this is either going to be like an ABC up or possibly a 5-wave up. And so that's always the question when you see this type of movement is this corrective up followed by a corrective down, or are we going to see a 1 through 5 movement higher? If the market's headed higher or headed lower, and the 10-year is going to make a blow off top into a high, and this be the final move for treasuries, then we would expect to see possibly something like this where we get a bit of a shakeout into the summer months. In equities, bonds make a high, they pull back into the more bullish months for equities, and then make a new high into the early part of next year, and then that's our blow off top. So yeah, it's just a waiting game at this point. See on the So another one on rates. So this is the market rate for the US 2 year versus the effective Fed funds rate. And this is like following our cycle perfectly, unfortunately. Um, so we climb into a higher rate environment. Equities, it's a headwind for equities, um, and then the low rates aren't a tailwind until rates have bottomed. And so as rates, gradually come down, that's the Fed catching up to the market. And as rates gradually go up, that's the market leading the Fed. And so we've been below the effective Fed funds rate on the 2 year, since about March of last year. And this will, be the dissension in the curve. And then I had a couple of lines on here that were verticals that were multiple fib time zones lined up around rates and monetary policy. And we're seeing a lot of this volatility coincide with those, which is to be expected. I think that's mainly all that I have that's unique on rates. A few equities of interest. So it's the it's an international ETF. This is above its 34-day moving average cloud. So this one's looking like it's in a steady uptrend, maybe getting into like a wave three pullback. Um, I like this for an opportunity. If the U.S. markets see a sustained downtrend, then international markets will draw down, coinciding with them. But this looks really strong to me right now. I'm hesitant to put new money anywhere right now, but this is a pretty strong looking ETF. So, if we were to look at a forecast on this, um, if we were to forecast this, I would say, looking at the momentum transition at a low, look at a volume profile. So we've got, some dense volume right here. This is our point of interest. So if we think that this is headed higher, this is a massive, so this would lead to a massive projection. So I'm not super comfortable with that. So we've got this gap in November of last year where we gap up and away from the anchored weighted average from the prior high. And that gives us a projection pretty close to where the 168 is. So that's a not an unreasonable target when we're looking at a trending asset. So we could see a movement up to this level. So you've got the breakout and retest. If it's going to make this continued move higher, I wouldn't want to see it fall, more than 50% of the way back um, through this first blue box. So that would represent like a 5-to-1 risk reward on a 15% opportunity for an international ETF. That's pretty strong, especially when the market doesn't have very much to offer us right now. So again, everybody has to manage their risk profile as carefully as they can. There are very few things that I'm interested in buying right now, and if there are, to the extent that the market's reacting to things like tariffs, then maybe this is an opportunity internationally that we want to check out. If doing this, though, I would probably take profit into this 87 area. That's probably the first territory for it to fail. And so if this is like a 1 through 5, usually, when we put in a wave 3, the wave 4 comes back to like visit in a cluster of activity. So we maybe see something like this. Notice it's kind of small, but yeah, that would be like kind of classic behavior for an uptrend. Yeah, that one looks good. But looking at a few things that do not look good. European banks are probably, this is a multi-year base that they've broken out of, and this looks really close to tapped to me. So I'm not even going to chart that one more heavily, but it's just coming out of this multi-year base. I don't know how much higher these could run, but worth keeping an eye on. And then on the US side, Apple is one of the it's been one of the hideouts for capital, even in the it's like kind of a slower moving company, but its stock has done super well these last couple of years. So we've got sell-off conditions on the volatility weighted MACD, and then when we look at the cycle adaptive stochastic, when these cross this lower level the first time, that's usually that forecasts about 50% of the move. If that's accurate for what Apple's doing right now, that would call for us to be kind of a lot going on. That would call for us to revisit the bottom of this regression channel, which it's done several times. It's not a stranger to the bottom of the regression, despite it being, you think of this as like a bellwether, but Apple offers us a lot of opportunity to trade it year in and year out. And so if we do see a move to the lower level of this regression band, that's an area of interest for me personally. And that would be close to a 100% retrace from the last momentum crossover. You notice how consistently this is following the Gann timeline. We've got our swing high and swing low occurring like almost exactly on this Gann timeline over and over again on a closing basis. So this is a move that could play out through the end of this month into the early part of April before finding a bottom and doing something different. Or if we're going to see the market bounce from here, maybe we get a little bounce, into that late March timeframe, and then a second leg down into the lower portion of the regression channel. So Apple's one to keep an eye on. It's one that we'll see money flow to in a recovery. Taking a look at Costco, I posted this one earlier, but these Gann boxes need the screen to stay proportional. So Gann boxes give us a pattern that the price will follow pretty consistently if we're anchoring them in the appropriate area, and usually at the start of a trend. So when it breaks out of this base in the end of 2023, that's where I'm starting a new Gann box, because it's happening right on the 225 on a Gann time frame, and it's showing us a shift in trend. And then right as it gets to the 618, it starts to correct. So that's classic kind of behavior. Down here, taking it from the low, It's getting to about 50% of the way through the GAN box, running into the 382, and then starting its consolidation. So we're about 50% of the way through, a little bit more, and it's made a high. I would not be surprised to see this, consolidate off to the right. And then again, looking at that stochastic, we've got our first crossover on the stochastic, and that would call for on a, using that measuring basis and assuming that this is 50% of the move, that would call for us to come all the way back down to like the 1272, the 790 to 800 level. I don't know that I would be looking to add to Costco into a low like that. I think I would like to see, confirmation of a higher low before I do new money on it. But we can see that we've got a couple of other instances where the first crossover in the stochastic, and again, this is, these aren't default settings. This is automatically calculating the cycle length using an Eller's formula. But you've got, making its 50% here, makes its 50% in 2021, makes the forecasted move in 2022. And then the only failed one is during the COVID low. And so should we see it fail, a failed, bearish move is always going to turn into a strong bullish move. So when you see one of the strongest stocks in the in the market, and the strongest in its sector rolling over this steeply, that tells us that we've got a little continuation going. And then, just taking a look at some of the energy. Energy looks like just as choppy as I've seen it in a long time. Conoco looks to, be making a low during a cycle low, but there's a lot of manipulation in energy, so I don't know if I trust this yet. I shared this in one of the groups earlier as well. We've got here's USO on the weekly. We've just got a consistent pattern of it, plateauing like this, and we're only about 2/3 of the way through that right now. So I'd say this if we see some good indications on energy, I'd be skeptical that it's going to break much higher than what we've seen, possibly a 10-15% move, but this will probably continue sideways for a while. And then industrials have had a pretty steep movement over the last like 15 months. That concluded at the early part of December, and it looks like we've finished an ABC correction. This could be like the last leg of the correction. If it falls below the 786, the low for XLI, I think will be, I would forecast that to be around 115 is where I would be comfortable adding to industrials here. But this is a sector that's done really well for us, and if we're to see a recovery, it might bounce. But if we're recovering, I would expect to see XLI be one of the sectors that recovers more so than tech. I think if we see things that are rotational, companies that are able to pass inflationary increases along to customers, I think we'll see that in industrials if there's a strong enough recovery. So that's most of what I had on my radar. What else? Is there anything else that you guys would want to take a look at?
So this JP, so no, I mean, this is a great presentation, so thank you very much.
Absolutely.
Very nice. Thank you very much.
You're welcome. Yeah.
Ben, this is Jim Healy. I was intrigued by your analysis of Hibbs versus the rollover, and I was following what you were saying about the two consecutive confirms of the S&P rollover. And that really caught my eye. And so, it's sort of contrarian to look at that Hibbs as more of a bounce indicator versus what the S&P indicator affirmed in that crossover. So I was wondering what your thoughts are. I mean, are you looking for that as an indication of a bounce, or are you looking at that as an indication of a floor?
I think it'll kind of tell us both. So similar to those assets under management for the bull and bear ETFs, the leveraged ones, as these guys get as the market like piles into these things, it's in a steady downtrend. It's dangerous to short the market, especially if it's still in an uptrend.
Yeah, they always have decay. I mean, these things just decay and decay, but
yeah, and so this is what they're working against with these ETFs, and it's a strong position to take short, but the risk is that you overstay your welcome, or that we see a bounce tomorrow, and people aren't going to want to carry these ETFs through the weekend. You get a strong news cycle over the weekend, and Trump could do inverse tariffs or something.
Well, no, but
by Sunday
I
night,
think it's either sit on your hands or take some shorts right now based on that indication, right? And that's kind of what I was debating myself was, do you pile into a few shorts? I mean, I piled into Fang D a little bit just because that one is the one that's rolling over the hardest, but it seems like it's played out.
Yeah, and so if we look at like George Lane's method with the forecasting that first movement over the upper level of the stochastic, then this Hibbs movement has already made its forecast. And like if you're disciplined with trading, you're taking profit when your forecast is hit. Let's see, we do it again over here. And that's right where this move reverses. So yeah, I wouldn't be surprised to see this roll over from here, but I do think that would be an indication of a bounce, that the market's waiting for more information and to see if we're going to take a leg lower. We would need to see some pretty strong buying take place to get a V-shaped reversal, and most likely we'll see like some profit taking from here and then maybe a leg higher. So I'd be interested in considering. I don't know if I would use this or if I would just short directly. I think it might be. I might prefer shorting some specific names to to the broader
EFTs.
Yeah, I do have a couple shorts that are on right now. I've got a short on for Northrop Grumman, and I'm looking for that to probably run down to like the 470 level to take profit. We'll see that this one's gotten real close to my stop loss. And then got one for HP.
Yeah, it seems like if we declare peace, some of those defense stocks are going to roll over.
Yeah, that's what I'm thinking. But who knows? Like the European countries are probably going to be staying pretty heavily into them. So for HP, what I see here is like when we use the measuring rule to identify like a top end target for a breakout. It's a failed breakout, and then the failed breakout then becomes the target for a bearish move downward. And it's almost to it. So I'm going to take profit on this one, starting around like 1350 or so, and then probably completely exit it by the time it gets just below 13.
So you just entered that trade?
I've had this one on, I think since Friday, maybe. Yeah, I've only had this
That
one.
was a pretty good call. That's a pretty remarkable spike down.
Yeah, but these, anytime, this is probably one of the best lessons I've picked up in the last years. Like anytime you see a bullish setup that doesn't meet its full potential, the forecast then goes the other way, which is, kind of easy pickings. Like the trade desk is one, and I did not short this one, but like this almost looks like it should have been done. It could actually, make it down to the 168. One other short on too. I'm trying to remember which one it is. I don't short often.
Yeah, no, that's where I've found more ideas lately.
Yeah.
What do you think about Hood right now?
Let me see. Oh, Air Products is the one I'm shorting right now. So this one, has crossed the 786, gives it high likelihood to come down here to this 1272, which meets the anchored weighted average from the 2022 high, and that's also being joined by the anchored moving average from the February 2024 low. So it just seems like a strong draw for price to move down that far, and I'll look to exit it a little bit early, but yeah, from this crossover, this is about like just under a 2-to-1 risk reward. So it's just not a great short, but it's just one that's on the radar. Let's take a look at Hood. Yeah, this could actually be pretty close to cooked. Yeah, this is sometimes like the growthier stuff is what comes back.
Yeah, I was just looking at that floor right there and wondering if that isn't, entry as momentum picks back up again, or it could be another short down looking at it. So I was debating which way this one's going. I have a position in it.
Yeah, I like this one long term. I don't know if I'm comfortable with where I've anchored here. I'm gonna just double check that. Yeah, taking it from this is like an RSI crossover right here as the MACD is crossing above zero. I
Yeah.
like that as that better for the anchor on the fib.
Yeah.
And we can see it's come down and it's failing the 618,
Yeah.
the 682, yeah, the 628, 618. And then it's failing the AV up from the low. That could be all it takes to push it down to the 786. So I would say if it goes below,
Yeah. That's exactly what I was looking at. I was like,
yeah, that's my bread and butter. It's like if it's supported at the 786, that's where I want to join it. And if it
I mean,
fails, if it fails here, then you've got the AV up from IPO. There's a possibility, and then where's another from a low? Yeah, you've got like AV ups from the lower level are coming up to rapidly meet that 786. That could be a pretty good target for this 3130 maybe. It's good. I don't know if I still have that on the radar.
all right. No, that was great. That was perfect. That was what I was looking for.
Awesome. What else do you guys have that we want to take a look at? Oh, this is an interesting one. This keeps popping up, Vive, on my screener. But I would say, given everything else that's happening in the market, maybe this runs up to the 786, like around the 270 area. But if it fails to have a strong move above the this 230 level that it's hanging out in, like it needs a strong break above this level with a tested support. If we don't see that, I would consider this a short opportunity, and the short opportunity that I would close on a move above like 280, but it could run all the way back down to the low 200s, just using this measuring basis to identify the potential for the bull move and the bear move.
So a failure at
Yeah, so if
next
it
time.
like we would look for a scenario, let's say it does like 1 through 5, you know, probably like something like this on a 1 through 5. But if it fails to if it has like a really shallow fifth wave and ends around the 786 area, then that could be a move down to that would be the start of like a bearish movement lower. So just anytime you find something where you could take advantage of it in each direction, it's a good one to keep on the radar. And you've got we've got some bearish divergence here with price, leading into well, it looks like it might have been like a corrective move. And I want to take a look at Microsoft too.
Yeah, that one's retraced back to my cost basis.
Oh no. So this will be Microsoft's a bit more rate sensitive. So as rates come down, they should benefit a little bit, and business outlook should help them. I'm going to redraw this. Actually, I'm going to leave the GAM box alone, but yeah, we're definitely in a steeper decline with Microsoft. I'd say that like the next area of interest is yeah, thanks JP. It's good to have you on here. I think this next area of interest for Microsoft gets into maybe this lower angle on the GAN box, which is lining up with a fib confluence level at 350 and the AVU up from the November 22 low. So that could be the ultimate low. I would definitely lean into it here though. From a cycle perspective, this looks like some classic cycle activity though. Like yeah, so there's definitely a pretty consistent ebb and flow with Microsoft, and you can see these couple of air gaps here. So if this one fails, you've got a little gap in volume that takes us right down to this next support level, which is the top of the base. That's pretty constructive, and it's doing that like in a pretty proportional movement. Like if we take our cycle this way. Like, yeah, so to come up into a bounce and a high, and then a low later in the early part of 2026 could be a normal type of move for Microsoft. Yeah, this one it's frustrating, but this is a good company. I think their story is going to remain strong. One of the comments that I picked up on in one of the podcasts over the weekend talked about the news cycle and some of the comments from earnings from these large companies. Like we've got some companies talking about that they don't know how the tariffs will impact them, so they're hedging themselves in their statements and giving softer guidance for the full year. That's prudent from a CEO perspective. It's free. Like you don't have to like make up a new excuse. It's one that a lot of companies can just kind of throw out there as an excuse if something doesn't go well. But you know, the we won't have an update on a lot of that stuff from these companies until like third and fourth quarter. So, you know, second quarter earnings, they're probably going to reiterate the same thing because we're not going to have much you know, economic impact from tariff updates, you know, that's materializing. So even if, you know, they all turn out to be fine, we won't know it until probably October. So that tells us that, you know, whatever catalysts are affecting sentiment could likely continue for a little while. You guys want to look at one or two more?
Would you be willing to look at Zscaler?
Oh, Zscaler, yeah. Now, let's see. Closed. Yeah, that's looking. I'm gonna do like a new Gann timeline on this one. I think from this low, I've got a lot on here. Jesus.
My Zscaler's chart is like the most messy of all my charts, with the most busy.
Yeah, I think I'm just gonna take the opportunity to clean it up now. Let's see. So if we take 23 as like the next low, then we can start a Gann timeline there. Yeah, I think so. You want to start these from like a confirmed higher low. So sometimes I take the first low in a downtrend after the prior downtrend, but if it doesn't line up very cleanly, then we try the next one. These should have a shelf life. So once like the trend changes, sometimes they're no longer relevant. That's been pretty consistent for pivot points. And we're coming up to another one towards the end of this month. So maybe that is a shakeout to our next low. So this looks like 5 waves up in an incomplete like zigzag. Yeah, this is where I'm like my Elliott wave background is like probably most exposed. So maybe we get something like this, like a triangle. Um, Connie always says to avoid triangles, but that's definitely what looks like we have here is like an ending diagonal. Yeah, you've got like kind of a case for a triangle. Yeah, I'd say, you know, conservatively, yeah, I'd say conservatively, it just looks incomplete. This like strong bar up. Yeah, probably back down to 180. Yeah, 182. Maybe if it doesn't take out these lows, that would be a pretty good sign. What's the volume look like there? So yeah, you've got this little gap here, right? Like that could bring us down to 172. Yeah, so I'd say if the level that it's at doesn't hold, then probably 172 to 182.
All right.
How do you feel about them like fundamentally, their story going forward? I know they've been a little frustrating.
Yeah, I mean, I'm optimistic over longer term. Yeah, I'm getting kicked out of where I am right now, so
Okay. Yeah. They're security, right?
yeah.
Okay. Yeah, I almost like expected the security names to do well once the news came out that we were backing off of some of our cybersecurity stuff.
Well, they have a lot of federal business. Like, a large part of their business is the federal government,
Hmm.
which is
Yeah, it's almost like some of these names led the move lower, right? So we got that market alert on the 4th, and we've seen like what looks like the bottom for CrowdStrike on the 10th. Like this might be a name that's a bit of a leader for the trend for us. So you've got CrowdStrike making a low on the 10th into an AVWAP and now possibly headed back up to one of the prior. That's interesting. Yeah, this is probably leading what we'll likely see from the rest of the market. Yeah, it looks like you've got the move lower. They both peak at the same time. The move lower in Zscaler and then the move lower in CrowdStrike. It's the cyber ETF hack. Still trying to put in a low. Yeah, interesting. Anything else you guys want to take a peek at? No requests for Bitcoin yet. No,
Can you look at Vertex?
yeah, absolutely. Yeah, Bitcoin has me concerned that we'll see the 786. When these AVWAPs fail like this, um, if it's not recovered with support, then I'm going to look for it to make its move to the next one lower. If we do see this movement upward, around the middle of March is where we'll likely see it. Which Vert Financial?
VRTX.
Yeah, the pharma names are looking well, made that target perfectly. Um, that looks like a pretty convincing uptrend. Um, yeah, so maybe like comes back down to the 8.6. Probably something like this. And so if it's going to continue higher, I'd say, the stop has to be like 495. But yeah, that looks really good. Crossing the 470 mark, puts it on track for at least 528. And a retest near the top of the regression channel. They already reported earnings, right?
Yeah,
Yeah, this looks good.
yeah, they got their non-opioid pain med approved with a better label than expected, so that was good.
What was the Yeah, a lot of pharmas are looking okay. Just starting their pullbacks.
AbbVie has been solid.
Abby's been awesome. Yeah. Let's take a look at it. Yeah, this one's starting to get into target of a measured move. Yeah, so this is what we have to watch out for with Abby because it's really, really consistent on these time zones and on its technicals. I feel like this is like a really underrated stock to trade on a technical basis. But like, you can trade this like a few times, a couple times a year. Yeah, so that like from a measured basis, like this is where we would forecast a top for it. So this could be getting close to a reversal, and it's been such a strong mover in pharma. I feel like a lot of funds that rotated away from GLP-1 ran into this for a little bit. Yeah, so I wouldn't be surprised to see it start to cool off from here if you haven't done any profit taking yet. But ultimately, I think these were fib confluence levels that I did after one of those classes, and this one became a really strong area of interest that it tested twice. And then the next one that I have targeted is like the 230 level. Um, so if you take profit on it, I would still like I'll personally still be adding it on retraces.
Well, look at the flip side of what's Lily look like to you.
I look at Lily constantly. This is yeah, this is our number 2 position right now still. So yeah, the this movement probably it's tough to say because you've got we've got a gap in here, which is going to be an area of interest with the AVWAP running through it. And so you've got this 45-degree angle on the GAN box. And this GAN box is interesting because it's taken right at the 961, like right on a GAN timeline. The trend started on a GAN timeline and peaked on a GAN timeline. So, and you've got two of these boxes proportionally drawn that have a strong directional movement right after their 50%, right? So you've got a consolidation ends at 50% and then runs to the top of the box. We start a new one where the downtrend begins. We go into a downtrend into the 50% in the middle of the box, and then it picks up. And now we've crossed below the 45-degree angle. And so you're bullish when it's above the 45-degree angle and bearish when you're below. And it dropped through that with with some authority here. You've got, let's check out the volume. For selling volume, it's a little high. It's not, and it doesn't really stand out volume wise from from a normal day. But you've fallen through the 618 and into the next vertical. So this either holds a support or we continue down to the 786. Maybe maybe we see something like more of an ABC. This is really steep. And maybe we get into like something like this. But when these AVWAPs start to like align to the verticals in the GAN box, it becomes a really strong draw. Maybe even down to like the 50% mark of the box. But I don't know if this is RFK influence still or what.
Well, they're still trading at a premium well above everybody else, and I think that's kind of what's happening. Is there the same thing Nvidia is going through? Is their earnings are great, everything's great, but their premium is way above market.
Yeah. This insider selling, and then the news with NVO has been pretty brutal too on the news cycle. But your ADX is flipped bearish. You get the momentum rollover. The RSI is in the bear zone. I'm probably going to take a little more profit on Lilly into a bounce if we see it. But yeah, I'm not super comfortable with it right now. I'm not comfortable with it for new money.
Awesome.
Yeah. I usually like something to fall from the number one spot in my portfolio due to selling, not to price erosion. So fortunately, I got a lot of that off of the table earlier. Broadcom looks pretty interesting. So this will probably be, continue to be like the strength in the sector for semis. If so, I'm thinking that we're going to see like a higher low towards the end of this box, and then maybe exited at the 618 around the 215 mark. But it's kind of in the middle of a cycle right now. I think one more I'll pull up is Procter Gamble. Oh, Eve, I see your comment about Baidu. Yeah, I've had some good options trades on the Chinese stocks. This is one that I've never had a good trade on Baidu. But man, look at this base. Like, I'm gonna hide a couple of drawings here. So Baidu coming off of that momentum transition back here. Yeah. Where is it drawing that? Oh, it's drawing it up there.
Hmm.
Yeah, I think if these names stay strong, um, when we had this movement in 2023, you can see it comes up and it fails into the 786. And this is why you want to keep stuff like this on your radar if you can. So we've got a good case for an inverted head and shoulders reversal pattern, and then it fails, right? So these don't draw perfectly. But so with an inverted head and shoulders, we would have forecasted the bullish movement, to come up here. And that gets it like right in between the 1414 and the 1618. So that's a pretty good target for a bullish move. It doesn't bring it back to all-time high or anything, but actually takes it back to like the top of this prior base that it broke out of. But failed bullish moves become strong bearish moves, and you've got almost an equal sized failure into the lower level. Now, when that completes, like it just has, so this is where we would have forecast the bearish move, and it's just completed the bearish move. So now you've got a good argument for upturn continuation. Like it's almost, and let's see what a VWAP looks like from the all-time high. So you got a lot of room before the next selling pressure. I'd say that, it's got to get up here and clear this AVWAP at like the $100 mark is going to be pretty important for Baidu. But it's clear the one from the failed high on in October, and it's testing that as support. So maybe a game plan is to run this one into the next AVWAP overhead. And if so, I would look to, yeah, this looks good. Like the way that I would play this personally is, assuming that we're going to see a 5-wave movement up, then you've got, one, your 2 fails at the AVWAP where we would expect it to. 3 is going to probably come up into, test an area of interest near like prior highs, like maybe this 50% mark way in the back, come down and retest close to the AVWAP, and then you've got your like 5th wave up into the selling pressure overhead. So maybe something like this. And then the longer term, when it gets out of this base, like, so we're going to want to watch it a couple of ways. Like we'll look for it to complete the formation of this base and then challenge for this upper level again. But for the near term, if I was to get into this one, I would like to see it get up above. I'm going to use the different drawing tool. So I'm going to look to see it get, make a movement that's like gets above this AVWAP and tests it, and then takes off. Like that's where I would look to join the trend, and I wouldn't want it to fall below this prior low around like the 89 mark, and I want to see that retest to get comfortable getting into it. But it's sometimes these things just take off and rip. But that's like a bounce above this AVWAP, testing it as support, with your stop down here is like almost a 4-to-1 risk return. That's pretty good.
What about like for down to the left shoulder or the right shoulder from that head and shoulder as a mark? You think it's gonna come lower?
You mean
'Cause
like
from the third wave down to the fourth wave?
oh it it could it
Because it
depends on,
seems to like that level, right? If you draw that line, there's a lot of points on
yeah.
that level.
Yeah,
I don't know.
the thing with these waves is like, we could see like this being like a subwave and a larger movement. And that's where like people that are much better with Elliott wave would probably tear me apart. But like, we could be looking back on a movement. Um, we're just gonna do that there. Next year where this is like we consider this to be 1-2, and then 1-2 to get out of this base, 3 maybe into the 2-7-2, and then you're 5, right? Like this could be your longer term overarching, and you have like a couple of 1 through 5 movements in each leg.
Hmm.
Yeah, but I think you're right that like we'll probably see some where the resistance comes in for this 3 up, I'm thinking is going to be before this AVWAP joins it. So yeah, maybe in the middle. See what the volume looks like. Yeah, it's so dense. Like it's almost hard to make the call on volume. And it's an ADR, right? So you're not seeing the full volume. Yeah, wild. Yeah,
I keep asking myself a question on Baidu is why isn't it responding the way some of the other, KC and JD and Baba have responded recently? It hasn't followed.
no, and like
I think that's because they don't do a lot of trades with the US, right? Whereas Baba trades with the US, so they're going to be impacted by tariffs.
Don't know. This is just an observation. I don't know why.
Hmm.
yeah, they're AI, right? As well.
Baidu?
Yeah, are they?
Well, they can apply AI. They're a big marketplace. They're one of the biggest, right?
That's
They're the consumer station
Google,
in China.
Hmm.
So that's kind of what's got me scratching my head is I like the chart. I mean, I like it. I like the risk upside here. Baba's sort of already played out. It's already banged up like that.
Yeah. I know that the K-Web, yeah, these are
Yes, if you compare Baidu to Kweb, I think you'll see, a lot of guys taking off and not Baidu. Maybe not.
yeah, but it definitely like a very correlated movement. Oh yeah, you can see the separation with K-Web here.
Yeah. So I'm trying to figure out why Baidu's not going. I've been tempted to go into it, but why is it not responding the way the other guys have responded?
Yeah, it's interesting. Their Pinduoduo is another one that like had the failed breakout. It looks like it's probably doing like a cup pattern back up into this dense volume area near 143. So like this was the ABC down, a weird failed movement upwards, and then maybe we're getting an ABC or like a 1-through-5 up. Pinduo looks good. Have you guys checked out SE? Is this one C Limited? That's a pretty sweet looking base right there.
I've been in and out of this one.
Yeah, I think we need to see what it does here. But like if it comes back to, because like it's just made a forecast, right? So it should ABC back down to like the 168. around 95 or so, maybe 82. But like, if it does that, I'm gonna go back into it. I've still got a small position in it, but yeah, this looks pretty good too. It's these international e-commerce names.
That one's in Singapore.
Yeah, yeah. They're not. I'm looking at like a couple of different ones that were. Let's try to remember what that. Oh, it's like the emerging market internet ETF. Like probably due for like a corrective move down, and then. But these are names to keep on the radar for the future. They all look really good. Like we should see a movement back to this volume area over the next few months before it drops back down.
EMQQ, haven't seen that one.
Yeah, I'm trying to think of who else is what their holdings are. Yeah, so they've got Baba, Pinduoduo, Tencent, Reliance Industries, Sea Limited, Mercado Libre, Baja Finance, JD.com. That's like
Yes. A lot of good names.
yeah, like online international emerging market e-commerce platforms.
Hmm.
And then here's the Baltic um dry shipping, Brickwave dry shipping came up on the ETF screener, but it doesn't look awesome. But trying to see what names are in this one as well. But I thought that like on a day that a lot of ETFs were getting clobbered, like this one seemed to be doing pretty well. And it's mostly futures contracts around international shipping. But yeah, this is if horsing around with this, I would do it very tightly. Yeah, I think that's about it for me. Do you guys have anything else that you want to take a look at?
I'm good for today.
A lot. Yeah, well, good. Well, I think we just keep our eyes peeled. If we do see a bounce tomorrow, I'll be very skeptical. We'll see a lot of people try to chase the first bounce that comes up, and I'm gonna use it as the opportunity to trim a bit more and just be ready for the low when we have confirmation of it. So, but if you guys see something, you see something cool that we should add to the radar, let me know. I'm happy to take a peek at anything. Awesome.
It was good. Thanks, Ben.
All right, thanks, guys.
Thank
I
you.
appreciate it. Have a good night.
Thank you, Ben.